Hi friends, welcome to the weekly roundup. Number 1. The Federal Reserve on Wednesday this week raised interest rates by a quarter of a percentage point. The US Central Bank lifted its benchmark overnight interest rate to the 5% to 5/4 range. It is the 10th consecutive increase since March 2022. Most analysts feel the Fed will continue to be data dependent and there may not be a pause yet on rate hikes in the future. US Treasury yields fell on Wednesday as investors digested the Federal Reserve's latest interest rate decision and guidance on the central bank's monetary policy path. The 10-year Treasury yield was down by 11 basis points to 3.49 post the rate hike. Moving on, there is some more update from US. The US banking crisis. After Signature Bank and Silicon Valley Bank, the third bank to get into trouble is First Republic Bank, which got taken over by the FDIC, or the Federal Deposit Insurance Corporation, and sold to JP Morgan Chase Bank, ending the lender's 6-week-long free fall in stock price and reassuring depositors that their money is safe. Its shares had been pummeled. They dropped 75% just last week, as investors feared that it would fail. The drop came after the company released earnings results saying that it had borrowed heavily from the Federal Reserve and government-backed lending groups, the financial industry's last lending resort. Ultimately, the FDIC decided it was no longer viable on its own. The First Republic Bank failure is the second largest in the US history after the collapse of the Washington Mutual in 2008. Let's see what's happening in the Indian debt market space. In the Indian debt market, the 10-year yield benchmark briefly went below 7% on Thursday, May 4th, before ending the day at 7.01. Over the last 1 month, the yield has fallen by more than 25 basis points. What are the reasons for this rally in bond prices? Number 1, expectations of lower inflation. 2, prolonged pause by RBI. And number 3, increased demand for government securities from the merged HDFC entity, and finally, the fall in crude oil prices. This week, Go First Airline, India's fourth largest airline in terms of market share, filed for voluntary bankruptcy. On Tuesday, Go First said it has been forced to apply to the National Company Law Tribunal in Delhi for resolution and protection under Section 10 of IBC due to ever-increasing failure of Pratt and Whitney engines that power its fleet. Impact on related stocks in the stock market. The share price of competitors like Indigo or Interglobe Aviation soared 8.2%, while SpiceJet stock prices fell by 5.5%. Since Go First owes its financial creditors almost $800 million, or approximately 65.21 billion rupees, shares of the cash-strapped airlines lenders tanked in trade. The shares of Central Bank of India sank 7.2% and Bank of Baroda slipped by 4.1%, by private lenders like IDBI Bank and Axis Bank saw their stock prices tank by 3% and 1% respectively. The company's parent, Wadia Group, also owns Britannia Industries and Bombay Dyeing and Manufacturing. Both the firms' share prices crashed on the bourses, falling by approximately 5%. Finally, there is some good news on the macro front. India's services sector surged in April as the sector's PMI, or the Purchasing Managers Index, jumped to 62 from 57.8 in March, according to the data released by S&P Global on 3rd of May. At 62, the PMI is the highest in nearly 13 years. The latest services PMI data comes a couple of days after the manufacturing PMI, which rose to 4-month high of 57.2 in April. The growth was linked by survey members to strong demand for services and competitive pricing. Financial and insurance was the brightest spot, topping the sectoral growth rankings. On that note, signing off for this week. Speak to you same time next week. Till then, take care and keep following us and subscribe to OAWA. Bye-bye.